Back in October, Jack Dorsey, the founder of Twitter, tweeted this: "Hyperinflation is going to change everything. It's happening." And the basic response to this was everybody laughed and said there's no way this could happen. But could Jack have been right? Things are looking a little bit different now, a few months into the future. Here's what we're seeing now. Food prices at the start of 2022 are up 7%. Gas prices are up 40% in January, and that's before prices started skyrocketing because of what's going on in Europe. We've seen gas at over $2 per liter up here in Canada, and in the US, rent prices are up 16% on average and up over 40% in some cities. Wages are stagnant on top of that, which means you're effectively earning less. What is up, guys? My name is Brie, and in this video, we're answering the questions: was Jack Dorsey right about hyperinflation? Are we headed for hyperinflation? And if we are, what does that look like? And what can you do to protect yourself and to protect your purchasing power? Now, this first part is really important because even though we're seeing inflation right now, inflation does not equal hyperinflation. Let's dig into the differences. Now, inflation basically is caused by changes in the supply and demand of money. When there is too much money versus too little supply, then you start to see prices going up, which is inflation. So the net result of inflation is a reduction in the purchasing power of your money. Inflation is why something that you buy for $1 today might cost you $1.50 a year from now. For example, you know how your grandpa is always bragging how he bought his house for $10,000 and supported a family of 7 on minimum wage? Meanwhile, today, that same house costs $500,000 and 2 college-educated people can struggle to pay all their bills and pay their mortgage and support their own lives. And yeah, you can thank inflation for that. And hyperinflation is basically inflation on steroids. Now, there's a couple different definitions of what constitutes hyperinflation and what's simply just regular old inflation. In the first situation, hyperinflation is considered to be out of control inflation where the prices of goods and services rises at a rate of over 1,000% per year. Now, the second definition is a little bit different. It breaks that down. And if you measure it this way, hyperinflation is, again, inflation out of control, but it happens when inflation reaches 50% month over month. And unfortunately, hyperinflation is not just the thing that happened in the past. There's actually a couple examples of modern day hyperinflation right now. Look at examples like Argentina, like Zimbabwe, like Venezuela. We'll get into what that looks like in just a second, but just know that this is possible right now, and it is happening in some places around the world. So what causes hyperinflation and what is causing our current rise in inflation that we're seeing here in the West? Now, there are 2 primary causes of hyperinflation, and the first is an increase in the money supply that is not supported by an increase in economic growth. So, for example, you have the Fed printing lots of money with quantitative easing, you have COVID stimulus checks, and this can cause huge problems. Now, you might have heard this stat floating around that the Fed has printed 40% of all US dollars in 2020 and 2021. So that is a huge injection into the supply of money without the corresponding increase in growth in output to match it. Now, the second cause of hyperinflation is an increase in demand without an increase in supply, and we're seeing that as well. And things like supply chain issues can contribute to this, which we've been seeing throughout COVID. But not only because of that, not only because of these supply chain issues, we are also seeing supply side issues because of what's going on with the Ukraine and Russia. Now, when 30% of the world's wheat supply comes from Ukraine and Russia, and then that supply gets cut off due to sanctions, you've got a huge supply and demand problem, which is what we're seeing already right now with the rise in gas and oil prices. Let's step back a moment and take a look at the official numbers of inflation according to the Fed and the government. Now, the Fed's official inflation number is 7.9% as of February 2022, and this is the highest we've seen in 40 years. So obviously 7.9% is nowhere near the 1,000% per year that we need to see for hyperinflation. But the question is, are these numbers even accurate? Now, how the Fed measures the inflation level is by looking at this CPI, which is the cost for a basket of goods. Now, if you look at the official charts, we see the consumer price index CPI for all items. There's that 7.9 there. Food is 7.9. We have energy at 25.6% and everything else 6.4. But if we want to dive in and look at things more specifically, we can break this down into more specific categories. So right now, this is the 12-month percentage change for things like food. We're seeing that 7%, energy, that's 27%, electricity is up 10%, gasoline is up 40%, used vehicles up 40%, and shelter up 4.4%. And if we're talking about everyday basics like food, the largest increase for grocery was that of meats, poultry, fish, and eggs, which rose 12.2% over the year. There's a lot of voices out there, a lot of experts saying that this is probably not actually accurate. Now, if you take your own experience and look at how much your costs have gone up, a lot of things are probably going to be more than the amounts chosen here. If you look at the shelter number, it said it went up 4.4%. If you ask around, a lot of people have paid a lot more than 4.4% more for their rent this year than they did just last year. So all of this is to be taken with a grain of salt. And that is because the feds can manipulate the CPI index by simply switching out different things in that basket of goods and to make it look like the prices have gone up less than they actually have. And we've all watched over the past year or so where the narrative has constantly been changing. A few months ago, when prices began to spike throughout the US economy, Americans were told not to worry, it was just a temporary blip. After that, we were told that inflation was transitory, and now we're told that it's here to stay, but you shouldn't really worry about it. It's not going to keep going higher. But again, month after month, inflation creeps up and up and up. And with all of the events happening in the world, this is all pushing us towards higher and higher inflation. So inflation is continuing to go up, and even though we're not anywhere near hyperinflation yet, what would it look like if it did happen? So right now, inflation is still in the single digits in the United States, but it has gotten to double digits in the past. Back in World War I era, World War II era, and in the 1970s when we came off the gold standard are all times when we've hit double-digit inflation numbers in the US. And according to data from Johns Hopkins University, there have been 62 documented instances of hyperinflation since the 1700s, and in every instance, economic conditions deteriorated so fast that in all cases, national currencies failed, meaning that they lost nearly all of their purchasing power, both domestically and internationally. So even though we're not close to hyperinflation yet, these things can happen quickly, so it is a good idea to be prepared in case that happens. But first, let's look at an example of what does hyperinflation look like in a country, and there's no better example than modern day Zimbabwe. Now, a decade ago, Zimbabwe's inflation rate stood at 98% daily inflation rate. So the economy went into free fall and consumer prices doubled on a daily basis. And because of that, the Zimbabwean dollar is no longer in circulation. They rely on other foreign currencies like the US dollar and the South African rand as a medium of exchange. So whether you are dealing with Zimbabwe's 98% inflation per day, or you're having the base minimum of hyperinflation at 1,000% per year, what does that look like? For example, a cup of coffee that normally costs you $3 would now cost you $22. And rent for an apartment in a major US city might normally cost you $2,000 right now. In a year, that could cost $22,000 per month. So under hyperinflation, things become wildly expensive very rapidly, which leads to all sorts of unrest and economic instability. So what can you do to protect yourself in the case of hyperinflation, or even if we just get double-digit higher regular old inflation? And the biggest thing I think you can do is to simply not leave your money lying around in a bank, because even though you're not going to be losing that money, you'll still have the same number in the bank. As more time goes on, you'll be able to buy less and less with that same amount of money. So if it's not a good idea to leave your money in your bank, what should you do with it? There's lots of different ways you can protect your purchasing power, but ideally you want to invest in assets that outperform inflation if you can, and you want to invest for the long term. So things like real estate, stocks, especially in things like commodities, energy, utilities, consumer staples, things that people are going to need no matter what happens in the world, those could be good things to invest in. Precious metals like gold and silver are always a good bet, and you could also diversify into crypto. I do have a portion of my net worth invested in the stock market right now, but the vast majority of mine is in crypto. And obviously you should do your own research and figure out what works best for you. I think it's a good idea to be diversified in a bunch of different things, because then you're not at risk of having all of your eggs in one basket and then that basket going up in flames. Then you're still going to be fine if you have things spread out in different investments. But personally, I have been putting a large chunk of my net worth into crypto, partially as a hedge against inflation, because, for example, with Bitcoin, there will only ever be 21 million Bitcoins. So it is not going to inflate away like your fiat currency can. Your government can go and print money as much as they want, basically without anyone to stop them. But with Bitcoin, there's only ever going to be 21 million Bitcoins. And as supply stays the same and demand goes up, the price goes up as well, and that preserves your purchasing power. So what do you think? Where will you be putting your money to protect yourself from inflation or against the potential future hyperinflation that we may or may not see? Share in a comment below. I'd love to hear what you guys are thinking, what you're going to be doing to protect your purchasing power. But if you want to learn more about crypto and how to operate confidently in the crypto space, if you're thinking of diversifying and putting some money into crypto, then I have a resource that's really going to help you. Check out my free Skillshare course, the Crypto Basics Bootcamp. This is a really short but actionable course in which you'll learn how to not only buy and sell crypto, but how to protect it, set up a wallet, how to get comfortable with the tech, buy NFTs, get into DeFi, all of the basics that you need to know to be a confident crypto investor. You'll learn it in there. This is perfect if you are a beginner wanting to get into crypto, but you don't know where to start and you're overwhelmed by all of the confusing terms and all of the crazy scammers. This will help you learn what you need to learn without all the BS. But if you sign up at my link in the description below, you'll get a free 30-day trial of Skillshare, in which you'll be able to go through my course as well as any of the other courses on the platform. It's truly a great place to learn just about anything. But that is it for this video, guys. So I just want to thank you for sticking it out. I truly appreciate all of your support. If you like this video, please give me a thumbs up, hit subscribe, share it with a friend. And if you're ready to continue on down the crypto rabbit hole, make sure you check out one of these videos next. And I will see you guys next time.